In this video, we're going to talk about the 12 best dividend tech stocks to buy right now. So, before we start, please like this video and subscribe to our channel for weekly updates. It's extremely difficult to find tech stocks that pay a dividend. And even if you do find some good ones, it can be challenging to focus on the top tech dividend stocks. In the past, tech companies have prioritized investing their profits back into growing their companies and increasing shareholder value through share price growth. It's simply in the beast's nature. Finding investments that pay dividends has turned into a necessity given the state of the market. Currently, the majority of dividend-paying tech stocks have yields under 2%. In this video, we'll discuss a few that offer significantly higher yields. The technology industry has advanced significantly over the past 10 years, and it now includes large, stable businesses that can easily meet their dividend obligations. That history has produced a healthy dividend increase for companies that are past the hypergrowth stage. Let's review our 12 dividend-paying tech stocks that you may want to consider adding to your investment portfolio. Number 12. Broadcom, ticker AVGO. Broadcom is a semiconductor giant with a massive portfolio of more than 23,000 patents. Its CEO, Hock Tan, has reshaped Broadcom in his tenure, with the firm foraying into infrastructure software solutions and acquiring other businesses to expand its total addressable market. Moreover, it boasts an illustrious dividend profile with 11 consecutive years of payouts and has achieved solid dividend growth in the process. On the fundamentals side, the company has done well to deliver robust revenue growth over the past several years. Its sales have grown more than 16.40% over the past 5 years, with a 37% increase in levered free cash flows. Analysts expect its margins and top line to grow faster as it rebrands its software division to VMware. Its acquisition of cloud infrastructure provider VMware could result in massive synergies down the line, with Broadcom planning to shift its licensed customers to subscriptions. In turn, the plan will likely result in higher recurring sales and a colossal increase in free cash flows. Broadcom's dividend yield is 3.4%. Number 11. HP, ticker HPQ. HP has been delivering personal computers, PCs, since 1939, and more profitably than its peers. Of late, it has been experiencing robust PC demand due to hybrid work environments, homeschooling, and other novel coronavirus pandemic-led tailwinds. Its printer segment has been experiencing declining revenue growth and has weighed in on its operating results. However, the trend hasn't gone unnoticed, as its management now focuses on multiple verticals to usher in the next growth phase. HP's second quarter results were encouraging, with its personal systems segment setting a new record with 9% sales growth year over year. Consequently, GAAP earnings per share came in at $1.08, comfortably beating estimates at $1.05. Perhaps more encouraging is that growth from emerging businesses such as peripherals and gaming has been rising at a healthy pace. HP's peripherals sales grew by more than 40% during the second quarter. Therefore, there's plenty to be excited over with HPQ stock, as recognized by the Oracle of Omaha Warren Buffett. HP dividend yield is 3.18%. Number 10. Intel, ticker INTC. Intel has the lion's share in the PC and data center markets, with a loyal customer base. Over the years, it has proven resilient despite multiple headwinds and generated heaps of cash to cover its dividends and buybacks. However, amidst the current market downturn, it trades near its 52-week lows and at just 2 times forward sales. Intel has plans to finally address production delays and chip shortages by developing its own foundries. It plans to dominate the space and reclaim the process lead by Taiwan semiconductor manufacturing company NYSE, TSM, within the next 3 years. In addition to catering to its own supply, it can also offer services as a third-party foundry to other companies down the line. The strategy will take quite some doing from a financial perspective, which is why Intel is streamlining its business and freeing up resources. Moreover, it has expanded into the discrete GPU market and could move into other profitable verticals down the line to diversify its risk. Number 9. Apple, ticker AAPL. Apple has been paying a relatively modest dividend with a 3% annual yield. Apple is clearly a leader in consumer electronics and personal computing devices. Although that has some analysts worried that the market for all things AI is getting saturated, according to S&P Capital IQ consensus estimates, this sweet little stock is still projected to grow at a rate of 20% per year for the next 5 years. The company also has no debt and a cash balance of more than $145 billion. Number 8. Oracle, ticker, ORCL. Oracle is a multinational IT corporation that delivers computer hardware and enterprise software products. It is especially well known for its database management systems. The company held 50% of market share in this growing area in 2011. The company also builds software and tools in other very key areas, including enterprise resource planning, customer relationship management, and supply chain management software. Oracle's smallish dividend is a bonus, but this is a solid stock overall. According to 13F filings, it was one of the most popular tech stocks among hedge funds and other institutional investors. Number 7. KT Corporation, ticker, KT. KT Corporation is a leading South Korean telecommunications services provider. Similar to other telcos, it delivered consistent top and bottom line growth while boasting a strong dividend profile. KT is unique in its approach as it has identified that it needs to diversify from core services such as voice and text. Its digital platform, DigiCo, segment is what sets it apart from the competition and could deliver strong gains over the next several years. DigiCo is a platform similar to what most software as a service enterprises operate, aiming to expand in multiple digital services. Some of these areas include original content, logistics, and others. The division is set to deliver double-digit growth for KT and could expand at an incredible pace, with the company investing $21 billion over the next 5 years. KT's dividend yield is 5.34%. Number 6. Iron Mountain, ticker, IRM. Iron Mountain has established itself as a leader in managing physical records and storage solutions. In recent years, though, it has been looking to transition toward digital data management and solutions. The world is quickly moving toward paperless transactions, and it's recognized the shift and developed a strong portfolio of data centers in the process. At the end of last year, it reported 177 megawatts of leasable capacity compared to 136 megawatts a year ago. In its first quarter, the company delivered record quarterly revenues and profits. Its revenues came in at a whopping $1.25 billion, with an adjusted EBITDA of $431 million. Moreover, its annual funds from operations per share grew more than 11% from the prior year period. Additionally, it boasts a well-positioned fortress balance sheet with $1.8 billion in liquidity. Iron Mountain's dividend yield is 5.02%. Number 5. Cisco, ticker, CSCO. Cisco Systems designs, produces and sells networking equipment, the myriad of devices and technologies that allow people to communicate electronically over a network. Cisco is a major player in networking hardware and software and is also one of the top voice-over IP providers for enterprises. Some analysts will say the company is no longer the bellwether it once was, and that it's losing market share. The upside is that Cisco is still one of the richest companies in the world, holding more than $50 billion in cash and cash equivalents. And you can't argue with its dividend growth. Since initiating a dividend payout in 2011, the company has already increased it. That payout looks pretty safe considering all that cash. And Cisco is still leading ahead of its closest competitors. Number 4. NetApp, ticker, NTAP. NetApp describes itself as a cloud-led data-centric software company that effectively allows customers to run their applications from data centers to the cloud. Its performances have been relatively strong, and it boasts healthy growth prospects ahead, particularly with its public cloud business. Operating results have mostly come in ahead of expectations. In its recently released fourth quarter results, it generated $1.68 billion in sales, representing an 8% bump year. Moreover, net billings grew by a remarkable 16% to $2.02 billion from the prior year quarter. Perhaps more importantly, capital return to its stockholders rose 53% sequentially from the third quarter, reaffirming its focus on shareholder capital return. Number 3. NortonLifeLock, ticker, NLOK. NortonLifeLock provides a wide range of cybersecurity solutions to its growing customer base. Its client base continues to grow and evolve rapidly, which bodes remarkably well for the company's long-term growth runway. Moreover, its services cater to 3 main cybersecurity branches: security, privacy, and identity. Its product base offers an easy-to-use platform that can enable its customers to effectively prevent, detect, and counter threats from cyber criminals. Its revenue growth has been choppy owing to the cutthroat competition in the sector. Nevertheless, it's coming off a strong year, and with its commitment to innovation, we expect single-digit revenue growth for the foreseeable future. Moreover, with its strong expertise in digital marketing, it can chomp away at its competitors' market share. More importantly, for income-oriented investors, it offers a healthy dividend yield of 2.24% with a payout ratio of roughly 28.60%. Number 2. Microsoft, ticker MSFT. Microsoft isn't just an 800-pound gorilla among tech stocks. As the world's largest software maker, it's the 800-pound gorilla. Microsoft has been a leader in operating system development and sales since it introduced MS-DOS in the 1980s, and is increasingly working to gain market share in the mobile computing sector with its introduction of Windows Phone 7 and Windows 8. What does all this amount to? The company has the revenue and stability to pay out a sweet 3.36% dividend yield. Number 1. International Business Machines, ticker IBM. This tech juggernaut has been leading the charge in personal computers since 1911, and now holds such a key presence on the global technology stage that it's become a household name. The company operates in a range of segments within the tech sector, including the manufacture and maintenance of computer systems, software, networking systems, storage devices and microelectronics. IBM's vast IT infrastructure network gives the company a deep reach into countless industries and businesses that use its technologies and business process services. The firm's dividend yield is far from juicy, but the company's sheer size and importance to businesses worldwide make it a worthy consideration for long-term investors. Even though it is less frequent, some tech stocks pay dividends that investors might want to pay more attention to. As always, before making an investment, make sure you understand how these businesses function and what will determine the stock's value. Which of these dividend-paying tech stocks would you consider adding to your investment portfolio? Let us know in the comments below. And don't forget to like this video and subscribe to our channel for weekly videos on the best stocks to buy and latest investment strategies. Thank you for watching.